Hey guys, Shawnee, your tax goddess here. So if you have been watching our channel for any length of time, you know one of my favorite things to say is don't panic, okay? Don't panic. So, there is a lot of media, Twitter, Facebook, there's a lot of rumors. We've been talking about this for months, it feels like. There is a ton of rumors about CARES Act, about the stimulus payment, about what's happening with COVID, right? Do not play into the fears that the media and that other people kind of work you up into, all right? So today's topic is the stimulus check. Now, the stimulus check is going out, it's per person. This was the CARES Act 1, all right? We're hopefully later today, in about an hour, we will actually get CARES Act Part 2, but at the moment, this video is about CARES Act Part 1, the stimulus checks. So each individual who didn't make above a certain level, right, certain income levels, was supposed to get $1,200 for a single person, $2,400 if you're married, and an extra $500 per child up to the age of 17, okay? Now, basically, the media, the rumors were flying around saying, well, if you got the check now, you're going to have to repay it on your 2020 tax return. That's not true, okay? It is an advance, all right? And I think that's what's freaking people out, is that they're hearing the term advance going, oh my God, well, am I going to have to pay it back? No, you will not, okay? Basically, what's going to happen is on the 2020 tax return, there's going to be a calculation in that tax return as to whether or not did you receive the original money, and if you didn't receive the original money, should you have received the money, and therefore take the credit now versus did you get the cash then? So it's not that if you got the cash, you're going to have to pay it back. That is not true, okay? You're going to get the cash. You get to keep the cash. The cash is non-taxable, okay? So this is free cash, guys. But of course not if you're above the income limits. And I think that's really where the confusion is coming in. Let's say, for example, in 2018 or 2019, your income was below the limit, but then in 2020, your income went above the limit. Okay, there might be a calculation of a little bit that you have to repay if you got your advance, okay? It's all based on your income limits. But, you're not going to have to pay it back. There's no double dipping. There's no, you're okay, okay? So don't panic is always, always, always the comment, all right? Now, technically, because there are some people where they're sending out these stimulus checks, but their income was higher in 2019, but it's going to be lower in 2020, okay? That means that in 2019, they wouldn't have gotten the credit, so they're not getting a stimulus check. But then in 2020, it went down, which, good or bad, with the COVID, a lot of us have gone down. Then you get the credit on your 2020 tax return, all right? So basically what the government is trying to do is that if at some point you were below this income limit, all right, you will get a credit on your tax return. So I know that's as clear as mud, guys, totally understand that. But the point is, please don't panic and please don't listen to the media, all right? Now you do, if you got the check, if you got the deposit, I would highly recommend that you take a screenshot of that deposit from your bank account, give it to your CPA. If you received a physical check, make a copy of the check. Your CPA is going to need that because your CPAs are going to need to know how much money you actually received so that they can properly file your 2020 taxes, okay? So again, please don't panic. Please, please, please don't panic. If you have questions, throw them down below. Join our Facebook group, Tax Strategies That Save Entrepreneurs Thousands. Make sure you are in there. All right. So I want to go with an example here. Okay. Just because it's going to be confusing. All right. So we'll try to make it less clear than mud. All right. So here's the question. What if I make more money this year? So 2020, we're making more money and I don't qualify for what I received, right? Meaning in 2018, 2019, you were lower. 2020, right? Now you're making more money. So here's an example, all right? You're an individual, no kids, you made $60,000 in 2019. You qualify, okay? You qualify for the full $1,200. In 2020, you get a raise, you get a bonus, you get whatever, you end up making $85,000, which puts you into the phase-out range, okay? Meaning technically you were only originally eligible for $700. So there's a $500 difference there. You will not have to pay that back, okay? You will not have to pay that back, all right? So now let's go the other way, right? 2019, your income was too high, all right? So you were in a phase out range or you were just completely out. But in 2020, you had a significant drop, which is probably more likely, okay? So here, you're an individual, no children. You made $85,000 in 2019, so you only qualified for $700, right? But then in 2020, you dropped to 60, and so now you qualify for the full $1,200. You will get the extra $500. Okay, so effectively what they're trying to do here, okay, is that no one's going to end up owing extra money to the IRS for stimulus, for checks that they get now, okay? Really what they're trying to do is get everybody $1,200. That's what they're trying to do, unless you're flat out just out, right? If you were out in 18, you know, your income was too high. Out in 18, out in 19, out in 20, you're not going to get a stimulus check, okay? But if you fell below in any of those years, you are good. You should have your stimulus check. You should have your money. Now, when everybody's actually going to get their stimulus check and when that money is going to hit their bank account is an entirely different issue. We have been getting a lot of comments about, you know, hey, is there a reason why I wouldn't get my check? You know, people are checking the website and the website is saying, oh, well, not yet, or we're working on it, or you don't qualify. It could literally be one of a million reasons. But it is supposed to be based on your income. So the very first place to check would be check your tax returns for 2018 and 2019, see how much money you made, and see whether you're in those phase-out ranges, okay? So just to make sure that we're all on the same page for the phase-out ranges, let me get those numbers there. So if you are... sorry guys, if you are single, okay, if you're AGI, that's what you're looking for, adjusted gross income. If you are single and your adjusted gross income is over 99,000, then there's no check, okay? It's 75,000 to 99,000, there's a phase out, 75,000 or less, there's a check, okay? And then if you're married or you file jointly, the number, the top amount is if you earn more than 198,000. Okay. So yeah, so there is a phase out. Again, guys, clear as mud. Okay. It is the government. They're doing their best, but we don't know why they do half the things they do. All right. So if you have any questions, please post them down below. Join the Facebook group. Ask the questions in the Facebook group. And if you're watching this from the Facebook group and you're not a subscriber on our YouTube channel, please go subscribe on the YouTube channel. We would love to have you guys in both places. Make sure you're getting breaking news as it occurs. So hopefully I'll have another video for you guys here shortly. Hopefully the CARES Act Bill 2 will pass. And as soon as it does, you guys will be the first to know. All right. Thanks so much, guys. Have a great day, and I'll talk to you later. Bye.